The most dangerous thing you can do in America right now is get better. 100 million Americans are currently carrying medical debt. Not because they were reckless, not because they skipped insurance, because getting sick in this country is a financial event, and the system profits from it. A hospital visit that costs the insurer $1,000 gets billed to you at $4,000 if you're uninsured. A claim your doctor ordered gets denied by an algorithm that took less than a second to review it. A debt you owe for getting sick can follow your credit score for years, while an entire industry lobbies to keep it there. None of that is accidental. This is how it was built. The scale of this is the first thing you need to understand. 100 million Americans are currently carrying medical or dental debt. Not people who struggled to pay once and moved on. People actively carrying it right now. That is roughly 1 in 3 Americans. 66.5%. That is the share of personal bankruptcies in the United States linked to medical expenses. 2 out of every 3 bankruptcies. Not student loans, not bad investments, not reckless spending, a hospital bill. And here is the number that reframes everything else. $5,304. That is the average deductible for a standard marketplace health insurance plan in 2026. Meaning, before your insurance pays a single dollar, you pay that. You are insured. You have coverage. You pay your premiums every month. And you still owe over $5,000 before any of it kicks in. Most Americans do not have $5,000 in savings. So getting sick, even with insurance, can immediately push you into debt. And in 2026, it is getting worse. The enhanced ACA subsidies that helped millions afford coverage expired at the end of 2025. Analysts project a surge of Americans pushed into thinner coverage or no coverage at all. More uninsured people facing Chargemaster prices. More insured people with deductibles they cannot meet. The timing is not accidental. We will come back to that. That is the system, and we haven't even gotten to the bill yet. Before the data, one person. Her name is Dana, 38 years old, nurse in Columbus, Ohio. Employer-sponsored insurance. Pays her premiums every month, never misses one. She sprains her ankle badly on a Sunday afternoon. Goes to the nearest ER. Is there for 3 hours. Gets an x-ray, a boot, and a prescription. 3 weeks later, 4 separate bills arrive. 1 from the hospital. 1 from the ER physician group. 1 from the radiologist. 1 from the orthopedic consultant who looked at the x-ray for 4 minutes. Total, $9,800. Her deductible, $5,200. Her savings account, $3,100. She is a nurse. She works in a hospital. She still cannot understand how those numbers were calculated. Keep her in mind as we go through this, because every number in this video happened to someone like her, and you genuinely cannot tell how those numbers were calculated. Room charge, $2,400. Facility fee, $680. Pharmaceutical dispensing, $340. What is a pharmaceutical dispensing fee? You have no idea. Neither does most of the billing department. And that is not a coincidence. Every hospital in America has something called a Chargemaster. It is the hospital's internal master price list. 10,000 to 50,000 line items. A price for every service, every drug, every supply. Here is the critical detail. Nobody pays Chargemaster prices. Insurance companies negotiate discounts. Medicare pays a fixed government rate. The Chargemaster is a fictional ceiling. But there is one group that gets billed at or near the full Chargemaster rate: people without insurance. Same service, same room, same doctor. If you have insurance, your insurer pays around $1,000. If you don't, you get billed $4,000. 4 times as much for identical care. Chargemaster markups increased 155% between 1996 and 2017. That is not inflation. That is a negotiation strategy. Hospitals inflate Chargemaster prices, knowing insurers will demand discounts. Insurers demand discounts, knowing hospitals inflated. It is a loop. and the only people caught outside it are the ones who can least afford to be. There is a real case from 2025 where a patient was billed $77,000 by a hospital. His insurer said it would pay 28% of that. Then the insurer discovered the scan wasn't covered. So the hospital billed the patient the full Chargemaster rate. Or, they offered, he could pay the cash rate of $14,259. The cash rate. That was the deal. A $77,000 bill dropping to $14,000 the moment you say you're paying cash. That price difference didn't appear because the hospital suddenly became generous. It appeared because the higher price was never real to begin with. Now here is something that almost never gets mentioned. Since 2021, hospitals have been legally required to publish their prices online. Every hospital, by federal law. A 2024 government audit found that 37% of hospitals still were not fully compliant. The penalty? A fine. The total number of hospitals actually fined for non-compliance? 18. Out of over 6,000 hospitals in the United States, the price of your healthcare is legally required to be public. Most hospitals have decided the fine is worth paying. Dana submits her claims. And level 2 is where you find out that having insurance does not mean your claim will be paid. In 2024, about 19% of in-network claims submitted through healthcare.gov were denied, nearly 1 in 5. And the most common stated reason? Not medically necessary. Not medically necessary. Your doctor ordered it, you had it done, and the insurance company reviewed it afterward and decided your doctor was wrong. Here is where it gets specific. Prior authorization is the process where you get insurance approval before a procedure. You jump through the hoops, you get pre-approved, then you have the procedure, then the claim is submitted, and then the insurer denies it anyway. In 2022, about 3.2% of pre-authorized claims were denied after the fact. By 2024, that number had risen to 10.4%. You got permission. You did the procedure. They said no anyway. And here is the number that tells you exactly how the system is designed. Fewer than 1% of denied claims are appealed by patients. Less than 1%. But when patients do appeal, when they actually push back, the denial is overturned roughly 40 to 65% of the time. The treatment was always appropriate. The denial was a first-move strategy. Most people never push back. The system was built on that assumption. And underneath all of this is a practice almost nobody knows exists. It is called post-claims underwriting. Here is how it works. You apply for insurance. You are approved. You pay your premiums. Then something happens. You get sick. You file a claim. And only now, after the claim, does the insurer investigate your original application, looking for any reason to void your coverage retroactively. A condition you forgot to mention. A medication you didn't list. Not fraud, not intentional omission. A form you filled out 3 years ago. It is legal, it is documented, and it happens most often to the people with the largest claims. There is a term in the insurance industry for customers who pay premiums but never file a claim. They are called preferred risk. You are most profitable to the insurer when you never use what you paid for. That sentence contains the entire business model. I need to stop here because everything I've described, the Chargemaster, the denials, the post-claims investigation, it all sounds like a series of bad policies, a broken system. I want to show you why that framing is wrong. Hospitals inflate Chargemaster prices because higher list prices mean higher negotiated rates. Higher negotiated rates mean more revenue. This is not a malfunction. It is the incentive. Insurance companies deny claims because most patients don't appeal. Every unpaid claim is profit. Prior authorization was sold to employers as a cost control tool. It became a delay tool. Delay long enough, and people give up. The people who designed these systems understood something fundamental. A patient receiving a bill is not a consumer making a choice. They are scared. They are often still recovering. They did not choose to be in the hospital. They cannot comparison shop from an ambulance. They cannot negotiate while they are unconscious. Every rule of normal market competition breaks down the moment healthcare becomes an emergency. The system was built in that gap, not despite the vulnerability, because of it. In 2023, the 5 largest U.S. health insurers collectively made $45 billion in profit. That is not a broken system. A broken system does not generate $45 billion in profit. What generates $45 billion in profit is a system that is working exactly as designed. The design is collect premiums, deny claims, force appeals, wait. The product they sell is coverage. The profit comes from not providing it. And the people who built this design spent $150 million lobbying Congress in 2024 alone. Not to improve healthcare, to protect the architecture that produces those profits. The system is not failing, it is succeeding. Dana's appeal gets denied. She sets up a payment plan she cannot sustain. And level 3 is what happens after that. After the bill, after the denial, after the appeal that went nowhere, after the payment plan that felt like the only option, after the person decides they cannot fight it anymore. The debt does not disappear. It moves. Medical debt gets sold to collections agencies, often for pennies on the dollar. The original hospital has written it off. The collections agency paid almost nothing for it, and now they come after you for the full amount, with interest, with fees, with calls. The 3 major credit bureaus voluntarily stopped reporting medical debt under $500 in 2023. That sounds like progress. Consider what it actually means. They removed the smallest balances, the ones least likely to affect a lending decision anyway. The large balances, the $8,000 ER bill, the $40,000 surgery, those stayed. Then the CFPB, the Consumer Financial Protection Bureau, finalized a rule in 2025. The rule would remove all medical debt from credit reports entirely. Every balance, every size, gone from your report. The rule is not in effect. It is tied up in legal challenges, filed by the banking and lending industry. Not the hospitals, not the insurers, the banks. Banks that use your credit score to set your mortgage rate. Banks that use your credit score to approve or deny your car loan. Banks that profit directly from a lower score. A regulator tried to remove debt you accumulated by getting sick. An entire industry spent money to stop it. Because your medical debt is their leverage. The medical debt does not stay in a hospital. It follows you into every financial decision you make for years. In some states, hospitals and collections agencies can garnish wages. They can place liens on your home. They can freeze your bank account. For a bill you received because you were sick. For a bill that may contain errors you were never shown. For a bill calculated using prices that nobody actually pays. And for the people at the end of this road, the ones with $30,000 or $80,000 in medical bills they have no plan to pay. There is bankruptcy. In the 12 months ending March 2026, 591,850 Americans filed for bankruptcy, up 11.9% from the year before. 66.5% of those filings linked to medical expenses. These are not people who overspent. These are people who got sick. And in the United States, getting sick is a financial event. One that the system is not designed to protect you from. One that the system is designed to profit from. Here is what I want you to take from this video. Not panic, preparation. Because this system, the Chargemaster, the denials, the AI flags, the collections chain, every single part of it runs most efficiently when you do not know it exists. The uninsured patient who pays the full Chargemaster rate does not know the insurer pays 4 times less. The patient whose claim is denied does not know that less than 1% appeal and that most of those win. The person who receives a medical collections call does not know they can request verification of the debt and that many collectors cannot provide it. Knowledge is the only structural advantage available to you in this system, because the system depends on you not knowing how it works. 3 things: specific, actionable. 1. Always request an itemized bill, not a summary. An itemized bill, every charge, every line. You have a legal right to this. Billing errors are common. Duplicate charges are common. Studies estimate between 49% and 80% of medical bills contain at least one error. You cannot dispute what you cannot see. 2. Appeal every denial, not some denials. Every single one. Less than 1% of patients appeal. When they do, the denial is overturned 40 to 65% of the time. That number exists because the denial was never the final answer. It was a test of whether you would stop. Do not stop. 3. If you receive a large bill, ask about financial assistance before you pay anything. Every nonprofit hospital in the United States is legally required to offer financial assistance programs. They are not required to tell you about them. Ask specifically, do you have a charity care or financial assistance program, and do I qualify? Many people who qualify never apply because they did not know to ask. Dana did not choose to get sick. She chose to go get help. The bill was the system's response to that decision. And every person watching this video is one ER visit, one diagnosis, one ambulance ride away from the same machine. The only thing that changes the outcome is knowing how it works before it happens. Not after you're already in it. Before. That is what this channel exists to do. If you want to know how the next system works before it catches you, subscribe. Not because I asked, because the next video will show you something else the system hopes you never find out. And now you know what that costs when you don't.